Everybody, welcome. Depending on when you're joining us, good morning, good afternoon, or good evening. Today is the Tuesday uh, Get Fundable update, where we take a look at what's going on in the lender marketplace, what new things borrowers need to watch out for, what's happening in the pandemic, and how banks and financial institutions are responding to that. So, welcome. Today we've got a very interesting update because one of the subscriptions that I subscribe to is American Banker, which is really the trade rag for lenders looking at what lenders are doing, right? And the editors of the American Banker are always looking and interviewing the C-suite level individuals of the top banks, the fintechs, uh, the financial institutions that are uh, doing groundbreaking activities. And once again, I'm going to keep coming back to this. There is a lot of movement. There's an unheard of amount of movement towards digital. And so we're going to cover a couple of examples of that and how everybody, all the banks, tier one, tier two, the fintechs, everybody is working their magic to develop not just digital products, but open up digital checking accounts, saving account. And in this episode of the update, we're going to be talking about how they're addressing the credit invisibles. So the one of the big headlines was, will the new credit building products work as promise? Right. And these credit building products are myriad. There are dozens, if not hundreds of them, because every bank is trying to approach this invisibles marketplace. So a couple of definite, let's get everybody reacquainted. Credit invisibles are individuals who do not currently have a credit profile, not a thin one, that are not even a part of the current credit marketplace, that is data that is collected by the credit bureaus and then scored by FICO. That is, so lenders lend, they report the borrower behaviors to the credit bureaus. FICO measures the data of those borrower behaviors and provide that 3-digit score. So when I say the credit system, that's what we're talking about. Now, there are over 50 million, at best estimates, over 50 million credit invisibles who are not in that system. They have not borrowed money from a financial institution that reports to the credit bureaus and that can be scored by the by FICO, and then the cycle continues where the lenders now pull a report on a borrower who's in the system, sees what their borrower behaviors look like, and can approve or deny further applications. All right. So, having said that, there are uh, uh, new entrances. It seems like every day, at least every week, but it seems like every day there are new entrances to this marketplace, new products given by banks, so that folks who don't have a any credit profile at all, or that have a skinny profile, what are called a thin profile. A thin profile is anything that's under 20 trade lines. But some people may only have one car loan. They may have only one credit union credit card for $500 that they got when they opened up the credit union a draft account. So these thin files also need bolstering because there's not enough real data for FICO to estimate the borrower behaviors, for lender software to estimate the borrower behaviors, to be able to give a really good prediction of risk, right, for future lending. So let's take a look at some of these. First of all, the first update is that lenders are cautiously optimistic because there's some big movements in the energy markets. There's oil prices have rebounded, natural gas prices, things that indicate that people are moving, traveling, etc. Plane flights are engaged more and more. If you haven't been to an airport, It's crazy out there. So all of these indicators provide cautious optimism to lenders that the economy continues to rebound. The Delta variant is also kind of out there like a boogeyman, playing with some markets, and so they're being careful. But as we described, I believe it was in episode 2 weeks ago in the update, they are literally opening up the markets more and more. They're easing how big that funding bullseye is. They're recalibrating what they are approving and what they are not approving based on this expanding economy, and so much so that now, what I've been discussing, these new credit products are being introduced more and more and more to give more persons, thin file persons and invisibles, the opportunity to get a piece of the credit pie. Good news, bad news. The good news is that for as long as there's a reasonable expansion or a positive slope to the opening of these financial markets, there's going to be persons who want to borrow money. And that's all good news for borrowers and for lenders. The Delta variant has created a kind of a kick in the shins. It hasn't necessarily crippled anybody or the economy, but we're now kind of hopping around on one leg after being kicked in the shins as an economy, and we're going to see if we end up falling to the ground, or don't you love that metaphor? That was a great analogy. Are we going to be hopping around until we fall on our ass, or are we going to recover and get our other foot to drop and return to a more stable economy? Now, given that, guess what else is happening? More and more banks. Not only are banks and financial institutions creating new secured credit cards and secured loans, and there's actually a product offered by Austin Capital Bank. They're not the only one, but this was highlighted in this article, where you can actually put money into like a savings account and literally make payments on a quasi loan from that savings account, and they will report those things as being faithfully paid. Now, that is not an extension of credit, and we haven't got time in this update to go through the nuances. That's why I recommend everybody go to the Get Fundable Bootcamp, where we talk about what's really fundable versus what's going to simply be reported to the credit bureaus and then added to a credit score. Remember, fundability and credit score are not the same thing. We haven't got the time to go through this now. But what's really cool on the business side of things is that maybe you guys are aware there's Zelle, there's Bento, there's different what they call B2B payment facilitating software. These are expanding, you guys, and this is awesome for me, my students, my clients, those of us who are running traffic cascades between banks. These are getting more and more these services of like Zelle, where you can transfer money to different financial institutions and not have it. That for so long, people were like, oh, if you're transferring money electronically, we got to watch out for money laundering and all these things. Well, that they've been Zelle and Bento and these other platforms have been around for long enough to tweak and know what the metrics look like so that they can catch money laundering versus traditional business to business electronic transfer of funds. That's the key point here as I swing this all the way back around. If I were a comment, I'd call it a callback, is that everybody is moving digital. And this movement of funds electronically is part of that groundswell, that development. It's crazy important, you guys, to understand that everything is moving digital. So Bento and Zelle, these network transfers are amazing if you're running a traffic cascade. So more and more. So I want to tell my clients who are listening, if you're running traffic cascades, you make sure that you continue to check back with each one of the banks in your funding model so that you can increase the amount of movement of these funds between your different operating accounts for your QFE. Sorry to talk Greek for those of you who are not deeper in the tribe, but if you want to know exactly what we're talking about, this Friday, the boot camp starts. Get Fundable Bootcamp, August 27th and 28th, starting at 9 a.m. Go to getfundablebootcamp.com, getfundablebootcamp.com, and grab your ticket. We have some amazing things to discuss this weekend, and we do a deep dive into all the stuff we're talking about, how important it is to be on the front end of this digital curve. Everything that you want to be as an entrepreneur, a real estate investor, the more you can do from your phone when you're sitting there, your iPad, the more that you can do on the fly rather than going to a branch or going to or going to an ATM or calling on the phone. The more you can do from here, the more power you have to affect positive change, grow your business, and use your credit lines that we've helped you obtain to continue to do more deals. So, you guys, there are a lot of new credit building products, and literally it's going to be throwing them against the wall and seeing which ones stick. Every online bank, which are tier 4 banks, so far we haven't changed what we mean or how we define a tier 4 bank. It's not a good, they're not the best banks. We want to be on tier 1s and tier 2s, but all the tier 1s and tier 2s are moving towards these more increasing the influence of Bento, Zelle, and Zelle-like payment networks for B2B, business to business. And what's amazing is business to business includes your QFE transferring money between your operating accounts. So you guys, so far there's a cautious thumbs up on the economy. Lenders are broadening increasing the size of the funding target. But as you learned in your boot camp, we want to be bullseye borrowers. We want to hit the funding bullseye so that regardless of how big or small the target is, we're prepared to receive higher approvals, higher credit limit increases, and use our credit lines and business loans to grow our businesses and do more deals. This is Merrill Chandler, your host of the Get Fundable universe and your guide to fundability. And I'd love to have you join me at the boot camp if you haven't done so. If you're already a member of the tribe and you're a funding hacker or client, come and join us. We're going to be talking so much about how to positively influence and be in charge of our own credit and funding approvals. I will see you on the inside.